So what does all this say about the state of the labor market and the overall health of the economy? Let's ask Seth Harris. He's a senior fellow at the Burns Center for Social Change and former acting U.S. Secretary of Labor under President Obama. Good afternoon. Welcome. Good to have you with us, Seth.
Thanks, Tyler. Good to be with you.
Does this put a stake in the heart of those who expect a recession over the next 12 to 18 months?
Well, it doesn't put the stake in the heart of the people, but it definitely kills the argument that a recession is coming. There is absolutely no indication of a recession. Instead, what we can expect is what we've had, which is solid, stable growth in the job market, solid, stable growth in the economy as a whole, steadily rising wages, which are going to outstrip inflation. So workers are going to be better off, have more money in their pockets to buy things for their families. It's a very strong economy continuing to do well. That's the message of today's
unemployment
report.
rate below 4% for 27 consecutive months. First time that has been the case in decades, since I was a pup. That's a long time. Why do you think that perception of a good economy has not filtered through to the general population? And why, oh, by the way, doesn't President Biden get more credit for that?
I think he's beginning to get more credit for it. But, inflation really took a bite out of families' paychecks, and a lot of people are still experiencing high prices. We're beginning to see maybe gas prices creep up a little bit. I think that is having a meaningful effect. Folks would like to see prices come down. That's one of the reasons you hear the president talking about it so much.
Right. And on that note, Seth, maybe these job numbers, they don't matter all that much because you've also got the immigration factor. It's really inflation. We're going to get CPI next week. How important is that when it comes to this broader picture, the rate cut trajectory from the Fed?
I think it's all important to the Fed's consideration of what the right thing to do is. We have seen inflation come down fairly steadily. We've had a couple of trips and stumbles here and there, but inflation is about 50 basis points above the Fed target. We're seeing steady growth. As I said, the job market is doing extremely well. The underlying economy is strong. So I think the wrestling match at the Fed right now is, do we need to cut interest rates to help the economy to grow more, or are we okay with a steady course? I would like to see them cut rates by 25 basis points just to send the signal that inflation is not a major concern in the economy anymore. Instead, what we want to do is focus on continuing this solid growth.
You've got wage growth going up at a little more, as I saw it, at a little more than 4%. You've got inflation a little below that. So people are actually, whether they feel it or not, they're actually having real wage gains, albeit small ones.
That's exactly right. And it takes a little bit of time for that to kick in. Remember, it wasn't that long ago that we were experiencing much higher inflation, and that really bites. People remember that. And I think we're also feeling the after effects of the pandemic recession. There's still a sense of instability among working people in our country. They also, let me just say, are a little frustrated that corporate profits are as high as they are and their wages are not rising commensurately. They're doing better, but they're watching corporations do fantastically well in this economy. They'd like to have a bigger share of that.
Seth, you say maybe one rate cut just to show that the Fed is confident on inflation, but this week, has that thrown a little bit of cold water? We've been talking about commodity prices. You mentioned gas prices yourself. How confident should we be about that trajectory?
I don't think we see any meaningful shocks that are going to knock us off this slow, steady, moderate growth path that we are on. Gas prices are always a concern, and certainly having two wars going on, significant wars going on in the world, is a significant concern. But as a general matter, what we have seen is a lot of stability, a lot of predictability. Those are the kinds of conditions that allow the Fed to make a policy choice, signaling to the economy, we think things are going well. We are no longer worried about inflation being a big problem. Instead, what we're worried about is some slowing of growth, although I don't think we see a meaningful indication of that. GDP has slowed in the first quarter. Our early indications are compared with the fourth quarter. So a little bit of juice, just a little bit from the Fed, I think would help the economy along and send a powerful signal, not just to the markets, but to working people.